If you're a trader who thinks 1 month of demo testing is enough before going live, this video might save you thousands of dollars and a whole lot of frustration. I used to think that too. 1 or 2 months of positive results, let's go live. But I've learned the hard way that that's not enough. Hi traders, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader. After years of testing, researching, and reviewing hundreds of strategies, my entire approach to demo testing has changed, and today I'll show you why. I'll also walk you through a live demo account I'm running right now with a bunch of strategies that are not ready to go live, and you'll see exactly what I mean. So if you're serious about becoming a consistent trader, stick around, you'll thank me in 12 months. So let's rewind a bit. When I first started, my logic was simple. Backtest a strategy, make sure it looks decent, then run it on a demo for a few weeks. If it made money, I'd go live. And honestly, that workflow does give you some validation, but what it doesn't give you, and this is critical, is statistical confidence. Anywho, if you're trading the higher time frame like I do, the 1 hour, the 4 hour, the daily, you're only going to get a handful of trades per month per strategy. I was going live with strategies after 2 or 3 trades. And let me tell you, that's not validation. That's guessing with a fancy chart. If you're a trader, you might want to check out trading.com. They are not a prop firm, but a way to get hedge fund capital and get paid along the way. If you're familiar with the prop firm industry, usually they have a million rules designed to make you fail. But since trading.com is not a prop firm, they don't have silly rules like trailing drawdowns, daily drawdowns, time limits, rules on your trading style. They just have 2 rules. Don't hit the max loss of 10% and you get moved up to the next stage when you hit the 20% profit target. There's 3 account types you can choose. Let's pretend you go with the 1K option. Then there's 5 stages. You start at stage 1, and when you make 20% profit, you receive 1.6K in payouts and move up to stage 2. Every time you make it to the next stage, you get more money and more payouts. And the last payout is 20K, where you're eligible for hedge fund capital. So if you're interested to start your journey to managing real money in a real trading account and get paid for it, then the link to trading.com is below. And thanks to trading.com for sponsoring this video. Let me show you what I'm working with now. This is a demo account I've been running. I'm currently testing about 9 to 12 different strategies across multiple pairs and timeframes. Some of them are showing early promise, but let's take a look at the trade counts. I've got my account synced up to FX Blue, and it's going for about a month now. Some strategies are profitable, some strategies are not profitable. It's a variety of different currency pairs and different timeframes. Let's switch over to the stats view. So under the stats tab, under strategy, so now everything is grouped by magic number because I give every expert advisor a unique magic number. If we take a look at the net profit column, you can see some strategies are losing so far in the past month and some strategies are winning. Overall, I am overall positive in the strategy pool. But if you take a look at the column over here that says number of trades, you've got some that have only 1 trade, some that have 4 trades, some that have 3 trades, which really is not statistically significant. 2 or 3 trades. That's it. The strategy might look solid. It could even be profitable right now, but 2 trade tells me almost nothing. What happens in a trendless market or after an FP or during a news spike? You could say the long-term 15-year backtest will tell you. Well, not really, because even though I've done my best to develop these strategies using the best practices in algorithmic trading, it's still just a backtest. Backtests mean nothing. Backtests don't really have true slippage, commissions, or real trading conditions, so I don't really know how it will behave in real market conditions. And I'm no longer okay making decisions based on incomplete information. So here's my new rule. If I'm going to trust a strategy with real money, it needs to survive at least 6 months of a demo, ideally closer to 12 months. not just because of time, but because I want it to trade through different types of market conditions: high volatility, low volatility, the summer chop, big news events. I want to see how it behaves. The longer I demo, the more data I get and the less I rely on hope. And by spreading my testing across multiple strategies at once, I can build up a pipeline. I'm not waiting around doing nothing. I'm always collecting data and preparing my next batch of live candidates. Look, I know waiting 6 to 12 months sounds boring. It's not what the internet gurus want to sell you. But if you want to actually become a trader who lasts, not just someone who gets lucky on a couple of trades and then blows up their account, this mindset shift is key. Treat your demo account like your proving ground. If your strategy can't handle 6 months of forward testing, it's probably not ready for the real world. And when you do go live, you'll be going in with real confidence because you've seen it all before. If this helped shift your thinking, hit the like button so YouTube actually shows this to more traders. Remember, good trading is slow, boring, and methodical, but that's what makes it work. And like I said, thank me in 12 months. Now, waiting 12 months is one step of the psychology of gaining confidence in your own strategy. Another key psychology step is thinking in bets. And there's a great book by Annie Duke, which I break down in this video right here, which I think you should watch next. See ya.